Education time. Here we discuss a topic which could be helpful to new traders, one of those terms people sling around and nobody even knows what they mean. Mark, the one we've come up with this time has been written up for us by Stuart Theobald, is a discussion about return on equity. There's a nice 3-page PDF which you can download and that'll get emailed out on the followhotstocks.com community. It looked to me like quite an interesting discussion, and it's one of those sort of quantitative things that you can look up about a company where effectively you're looking at the extent to which it returns capital on an ongoing basis. I put that badly. Its profits as a function of its kind of shareholder capital.
Yeah, look, it's another concept which you can take from a fairly headline level and get much more sophisticated with it. The degree to which we use it is always more or less kind of retrospectively and in terms of sectors. If you're looking at basically the amount of return that particular share is making on the equity which is invested or embedded into the share. The calculations that we've got on the fact sheet take you through the most basic versions, but there are a lot of kind of wrinkles to taking the analysis to one step further. Yeah. The key thing to remember with ROE is it's most useful for kind of comparing like-on-like shares in like-on-like sectors, and then making a decision based on and using that statistic or that number rather in kind of concert with the P, which we mentioned previously.
Yeah, that's a good point. So in other words, some industries are known for their high kind of capital intensity and others less so. Yeah. But this chart is interesting, and this is in the document. You can see stocks like Kumba and Vodacom, traditionally very profitable, very high margins, big dividend payers because they don't need the cash, would feature high up on the return on equity. And then companies like construction companies that have not been doing well, Lonman shows up down there as having poor return on equity. If I could broaden it for a moment, what do you think of these screening tools, where you kind of run through the whole market and you sift out those that have a return on equity above a certain level, and then you kind of earmark those for closer research? Well,
look, I mean, you've got to scrutinize that ROE a little bit better, because ROE can be skewed by debt factors, by share buybacks and various other things that have taken place in the period prior to the calculation of ROE. So on headline value, those numbers may be interesting and may pop out shares of interest, but it's incumbent upon the person making the investment decision to actually sit there and scrutinize why that ROE kind of sits there, and those equations that we provided may kind of tip the person in the right direction in terms of where to start looking at those numbers a bit more carefully.
Yeah. Look, anything which results in people doing a bit of research before they pull the trigger sounds like a good idea to me.
Yeah, I mean, it's all about homework. The more homework you do, or if you find a niche where you can do your homework seriously, you're going to get some kind of advantage in terms of information.
Excellent. Good point.